Hey guys, in today's video I'll be sharing with you how you can simplify your trading by focusing on just a few specific things. Now most traders end up complicating their process of analysis, and I think they do this because most of the time they're not so sure what they actually need to be profitable. Some traders think they need to be taking 10 trades every day. Some think they need to be taking multiple setups every week for them to be profitable. Some traders imagine they need to be trading 5, 6, 10 pairs. Some think they need to be trading specific concepts, maybe smart money concept or supply and demand for them to make money in the markets. And depending with what your idea is in terms of what you need to do to be profitable, you might not be completely wrong, but it's not always dependent on that. The goal of a trader is to get to a point where they understand what the market is doing, they can interpret price, they can make informed decisions in terms of buying or selling a specific currency pair or a specific instrument, and based of that they can profit consistently. So regardless of the winners and the losers, at the end of it you just want to find an edge. If you can achieve this and execute perfectly, it's just a matter of time before your results reflect a positive profit curve. If you can do anything above 3 to 5% return consistently a month, then you're outperforming 95% of the traders globally. So most traders complicate their trading, imagining they need to be getting so many setups, imagining they need to be trading SMC or maybe supply demand, whatever concept you want to call it. But the truth is, what you need is to make 3 to 5% return consistently. Regardless of how you make it, as long as you can find a model that can be repeated over time, then that's all that matters. Making 3% a month looks like a very difficult thing to some people. At the same time, some traders consider 3% to be a very tiny target which should be achievable. But ironically, the stats are showing that 95% of traders are not even profitable in the first place. So would you rather be the type of trader who considers 3% to be little, but yet you're a losing trader because you're overambitious and you're trying to make 10% every month? Or would you rather be conservative and make the 3 to 5%, but then you can repeat it consistently? And of course, as long as you have big capital, the returns are going to be worth it. So after understanding that an average of 3% is what you probably need for a start, the question is, how do you achieve it? Now, I have an example of this bullish setup here. As simple as this setup looks like, with a 15 pip stop and a 45 pip target, my risk to reward on this setup is 1:3. I only need such setup, one of it in a month, to risk 1% on this trade, and within 45 pips already I'll have achieved my 3%. As a trader, you will realize if you try to test out your markets, it's not so impossible for you to find one setup which can give you 3%. The only problem is most traders, either they complicate so much, or even after finding the nice setups which make them that 3%, they still go ahead to take other bad trades which eats up all the profit and they go back to drawdown. So successful trading is as simple as, number one, you don't need to be extremely overambitious. You don't need to force the market to give you so much. What you just need is a model that can be repeated over and over. There's a common phrase which says, as a trader, you need to find what works for you and you stick with it. What works for you can be scalping. What works for you can be day or swing trading. What works for you can be SMC concepts, trading the fair value gaps, order blocks, etc. What works for you can be support resistance. What works for you might be simple candlestick interpretation. So part of simplifying your trading is you need to block out the noise from the social media. There's nothing wrong with learning from people online. There's nothing wrong with watching even my videos and picking one or two things. But when you go to the market, you need to understand that your personality is unique, your trading style might be unique, and it's okay to stick to what works for you as long as it can give you an edge. There are so many times when I'm taking a buy setup in this market and I open my Twitter and I see people saying that this market is supposed to drop for the next 1 or 2 weeks. Now, they might be right that this market eventually will continue to drop, but still, I wasn't wrong on my short-term setup. So you need to only find a model that works for you and keep repeating it in the markets. Regardless of the name of the strategy you are using, as long as you know what you are doing, as long as you can interpret price, as long as you can make informed decisions in the market and capitalize to make nice returns, that's the most important thing. Before I continue, let me introduce you to fastbull.com, a platform that you can use for your economic calendar. If you want to follow up with the market fundamental activities and events, you can simply come to their website. You can come to their calendar and customize based on your time zone. You can filter depending with the type of fundamentals you want to follow up and also the specific countries affected. Currently, they do have a contest that is ongoing. Anyone can apply and participate in the contest. They do have prizes of up to $22,000, of course, to the top performers. You can also come under the rules and get the instructions on how to register for the contest and what is required from you, the trader, when you are taking part. And if you have the right trading skill and manage to be among the top, then you stand a chance to win as high as $10,000. Joining the contest is free. The registration is currently open I do have the links in the description, you can check them out. They also have a chat room where you can interact with other traders globally. They do have markets where you can come and do your analysis with different tools. The advantage is with their platform, it's actually free, so you won't be paying any subscription fee. I think one feature that is very beneficial is there is no limit on the historical candles. Whenever you are trying to scroll back, you won't get a limit on the candles and be required to subscribe. You can scroll and find the candles as long as the market has existed. You can also go further to customize your time frame to see price in the specific time frame that you want. You can set up to 1000 price alerts, meaning even if you're not on your chart and the market gets to a level that you want, you'll just get a notification. And on your watch list, you can add up to 1000 symbols. Check out the link in the description to download their mobile app as well. Otherwise, let's get back into the video. Another reason why traders struggle is they don't understand the importance of profitability being linked with something that can repeat itself. For instance, I can come today and identify a setup here and I buy. But what was the thought process before I took this setup? Is there proof to show that as long as I keep repeating the same thought process, in the next 10, 20, 30, 50 setups, I'm going to be positive? One of the ways that traders complicate their performance is inconsistency. So today you trade the news, trade NFP or CPI, you become lucky and you make a lot of money. Then the next 5 times you try to trade CPI, you end up losing 3-4 times whatever you gained on the first one. So don't be excited about getting one lucky win in the market. Don't be excited about doing something that you can't repeat over and over. Instead, focus on identifying a model that has proof of repetition in the market. How many times in a month am I expecting to see this setup that I'm looking for? Am I going to make money on this setup, but then I can't find it again in the next 2, 3, 4 months? And if I can't find it, then what will I be doing in the markets, right? So the aim of this video is to point you to a direction where you need to focus on identifying one model. If possible, when you're starting, you can even just choose one currency pair and backtest it and try to study it. In fact, it doesn't make sense for you to be trying to master 10 currency pairs or 10 markets while you've never even built an edge on just one market. If you can't master one market, how are you trying to become profitable while trading 10 pairs at the same time? So is there something specific that you are seeing this pair has been doing in the market? It could be a specific pattern, it could be a specific candlestick, it could be a specific zone where whenever price gets to there, you are seeing a certain reaction. So start from that and try to derive a entry criteria based on the first thing that you've seen repeating itself over and over. For example, one of the things that I noticed, which I think I've mentioned in my previous videos, is that if I'm trading a trending market, one of the things I focus on to know a good day where I'll be taking a setup is checking how the previous day closed. I've mentioned to you guys severally that if you find a market in a very clear trend, most of the time when the previous day closed bullish, it's like you already have a 60-70% chance that the next day this market will end up closing bullish. Your only work remains to now narrow down and wait for the market to come to key levels and look for price action confirmations, and then you take your setup. So as you study your markets and make them simpler, you need to understand that what works for you doesn't have to work for everyone else. It's not a must for you to trade the same with everyone else on the internet. Another thing you'll notice in the markets about high probability setups is they don't always happen every other time. For me as a day trader, the type of quality setups I look for sometimes only appear twice or thrice in a month. In a good month, maybe 4 times, but they don't appear as much. But one of these opportunities alone is enough to make me 3%. Now imagine in a month where they only appear thrice and 2 of them work in my favor. I gain 6% and the one that I lose 1, meaning I end up with 5%. And there are months where you're going to have a 3-trade winning streak. So you need to do away with the idea that the number of setups has got any correlation to do with the profit you'll make. In fact, the opposite is likely to be true, especially if you are trading from an emotional point. Such that the more you are trying to chase setups, the more you are trying to take every other trade on a daily basis, the more likely you'll be taking low quality setups, or you'll be mixing your nice setups with the poor quality ones. And then the poor quality ones come and wipe off the profits from the good trades. So you'd rather have a few setups over time, but then you are winning more. If you hang out with some of the most successful traders, they are the less busiest human beings in the market. You might find them for a whole week just watching price. Why? Because they haven't found their high quality setup. The opposite is true if you hang out with a losing trader. Most of the time they're very busy. They are always doing analysis. They're always moving from one market to another. They're always trying something new every other day. They don't even take time to master one thing. And the end result is they struggle in their performance. So the takeaway of this video is you need to focus on one entry model. Test it as many times as possible, adjust it where necessary. Start with just 1 or 2 pairs and focus on identifying a pattern that repeats itself in the market over and over. If you can do this, finding an edge becomes very simple in the market. And that's it for this video, guys. I'll see you next time.